stock of the day. Now, we are talking reporting season, so only fitting that we should have a look at one that's just reported. In fact, Gaurav and Luke both choosing this one. Lovisa, it is fashion, jewellery and accessories. First half profit there up 85% with continued momentum in the first 8 weeks of the new reporting period. This riddled with COVID costs and inflation pressures, of course. Shareholders, they'll get a interim dividend almost doubling there to 37 cents a share. And taking a look at the shares today, up some 20%. So, Gaurav, lots to love for Lovisa?
Oh, nice one, Andrew. I like that. I didn't even think about that one, but it's good. Yes. Look, if I had known that Luke doesn't own this stock, I would have recommended it earlier. I thought he owned it as well. I certainly owned it. I certainly own it, and we own it in most of our funds as well. It's been a really interesting ride for Lovisa from Intelligent Investor. We first came across this when it was quite early in its incubation, about $3 or so, several years ago. And we've got a sage Yoda-like mentor who comes into the office to train us every now and again, and he brought it up. And I remember looking at it and thinking, this thing is a fraud. There is no way that they are making these numbers. Usually retailers have really high inventory turnover or really high margins. They do not have both. And here you've got a business making 80% gross margins, flipping inventory sort of 5, 6, 7 times a year. I thought that's not possible. Something is wrong here. But the joke was on me. We watched the business double before we decided, look, we got to go investigate this. And so a bunch of us went out and started visiting stores, which was a really weird experience, having a bunch of middle-aged men go into the Lovisa stores. And it gave me a really good insight, though. I think the reason why so many people dismiss Lovisa and miss it altogether is that the business itself is aimed at sort of 13 to 15-year-old girls. And there's not a lot of those investing or controlling money. And when adult men, and it's mostly males in this job, when they look at a business like this, it's very easy to write it off as a fad or as a short-term fashion. And the margins are so extraordinary, you expect these to fall back. But that's not happening. This is actually this is probably the best retailer I've ever seen, ever. And it's that because it's completely vertically integrated. So it designs, manufactures, and sells its product, and it captures a margin all the way along. And the best thing about it, the reason why no one has been able to effectively compete against it, is that every time it makes its sale, it captures that data, and it's able to understand what items are selling, where they're selling, where the trends are going. And so its designers can pump out and flush out jewelry and stock to stores faster than anyone else. And the larger that store network gets, the better that advantage becomes. So this is a business that I think could be sort of 2,000 stores in a couple of years' time. They've only got a limited number of stores in the US. I think in US alone, they could have 1,000 plus stores. This is a rollout opportunity that's still got a long way to go. I won't necessarily be buying it today. I think it's a solid hold, but on pullbacks, this is one that you should be looking at to get in.
Maybe you should have bought yesterday then.
Yes, indeed. It could have bought yesterday. If you asked me yesterday, I would have.
Yeah, well, that's right. Yeah. Given it is up 20% this morning, and in fact, Gaurav, further to your point, I have daughters of that age.
So I
know exactly what you're talking about.
Do you go to the store, or do you wait outside when they go in?
Yeah, no, I defer to the wife, really. I'd prefer not to know, although I just see the bill at the end of the day, but I know exactly where you're coming from. Luke, your kids aren't yet of that age, but I know it's coming for you. So how are you looking at Lovisa?
Yeah, my kids are still in the sniggle age. We'll get to Lovisa in 10 years or so. Look, I will defend myself here, Andrew. When I used to work at my old shop running a mid-cap portfolio, I owned Lovisa. Running a micro-cap is just out of my universe. Otherwise, I would still love to own it. Gaurav's, look, he's nailed it, spot on. It's everything about the operations of the business. It's fantastic, and I agree. The metrics are to the point where you wonder, could this be real? But obviously it is. We know that now. One quick note, and I was a little bit late to Lovisa, a bit like Gaurav, and it's an interesting point he raised about managers wondering whether there could be fad elements to this business. And I remember one thing that sort of kept me away from Lovisa for a few years is they actually, I think this is back in FY18, Gaurav, you may remember, sort of came out and said they missed a trend, and from memory it was like leopard print or something was a big trend, and they came out and said they sort of missed that, and I think that sort of was in the memory of a lot of people for a while. But it's clear that, you know, as you've sort of highlighted, all of the good aspects of management since then, and the data they can gather and the insights they have over the industry, they're probably past something like that. And Gaurav's right, the bigger they get, the bigger that moat becomes. Looking at the result today, I mean, it's stellar. And particularly when you put it next to every other retailer who's been out so far in reporting season. All we've heard is COVID disruptions, supply chain issues, wage pressures. And this business comes out, and if they didn't comment on them specifically, you wouldn't have known they existed. 21% same-store sales growth, 48% total because they rolled out new stores, maintained their margins, a slight tick up in their operating costs, but again, nothing massive. It sort of went from 50% to 51.8%. Cash flow was fantastic. The trading update for the second half of the year is also fantastic. They've seen that momentum accelerate to 61% total sales growth. So I think Gaurav and I have the same problem. At heart, we're value investors, and it's difficult to buy something when it's up 20% on the day. I think if you can take a long enough time frame, you can actually buy it today. And that time frame may be 3 to 5 years as that store rollout sort of eats into the valuation that they've got. Definitely hold it if you're there. Don't try and trade this one on a good result. You hold it, put it on your watch list. Any dips, you definitely buy it. But even today, you know, you can maybe make a start on a small position on a long-term view.
Yeah, I actually agree with that. I think over time, we've had a go at kind of imagining what this business could look like at full scale, and I can't get a share price under $30. Like, depending on how wild you want to be with your assumptions, you can get up to $40, $50 very easily on this, but it takes time. It will take a long time, and you've got to face the execution risk, and you have to earn a return on your investment while you wait for all that to happen. So I actually take Luke's point there. I think if you have a long enough time horizon, you can do well from Lovisa at this point, but I think I can identify better opportunities for my capital today rather than to buy more Lovisa stock.
All right, nonetheless though, if you're seeing some dips there, buy it. That is the word from both our experts.